Welcome to this session of The Tax Life. I'm your host, Jeffrey White, 30-year tax professional, uh, business owner, husband, father, um, coach. And tonight's topic, I'm not going to say tonight's topic is controversial, but it probably goes against uh, common wisdom and common beliefs that a lot of taxpayers have. And they may even already know this, but their preference is to do something else other than what I'm going to suggest tonight. So our topic tonight is uh, the hidden cost of overpaying taxes, and we're going to concentrate on why I believe that a big refund isn't always a win. And so I had a conversation earlier today with one of my coworkers, one of my teammates. We had a discussion about how she feels about refunds. And I believe that how she feels is like a lot of people, like a lot of taxpayers feel. And tonight's topic and discussion is just kind of want to give you a different way of looking at it, of what a refund is, what it isn't, and why maybe a big refund is not always a win. Okay. So I want you to start by asking yourself a question. And I asked my coworker the same question. I said, how do you feel when you get a big tax refund? Do you feel excited? Do you feel um, relieved maybe that you don't owe? Or maybe you feel like, hey, I won the lottery? Or is it a relief that the money's coming and now you can maybe pay some expenses that you had planned on paying with this refund? Well, I want to hit you with the reality of the situation and the reality of the truth of a refund, and that I believe getting a huge refund is not a financial win. Okay, and again, like I stated earlier, this is going to kind of be controversial because it's going to go against conventional wisdom. Because everybody likes to get a big, now it's a direct deposit, but back in the day it used to be a check in the mail, and you get that check and it makes you excited, and you use it for different things. But I'm going to suggest that that's not always a good thing, and it actually might be a sign that you're making a few mistakes or miscalculations, and a refund in and of itself is not a bad thing. I just believe that a big or a huge refund is not the best way to manage your money or control your money. When you think about it, if you get a big refund and you look at it and it's made up of your own money, then the possibility that money that you get in total form when refund time comes actually could have been spread out over the 12 months, and you could have actually had that in your income stream. So that's what this conversation is going to be about tonight. I'll give you another example. If you got a $3,600 refund and you get that money, it's almost like I don't know, paying a utility bill every month an extra $300, or paying your landlord an extra $300, and then at the end of the year or at a certain period of time they give you the difference back. I mean, most of us would not be excited about that because we thought to ourselves, or we think to ourselves, hey, I could have had this money, this $300 a month, and I could have used it for a number of things. So I contend, and I would like those of you that are out there to kind of think about this differently in the form of when you receive your refund, especially if you get a large refund, and especially if you look forward to a large refund. All right, so um, in this session, I'm going to break down a few things. Number one, why I think a big refund is not such a good idea. Overpaying taxes costs you money and opportunity. That's number two. And then number three, why more planning and more forethought is involved in not necessarily getting a big refund, but being able to keep more of their money throughout the year versus waiting to get it back from the government. These are three things I want to talk about tonight. And hopefully by the end of this session, you'll at least have a different way of looking at a large refund and maybe start to make a few different plans that will allow you to have a little bit more control over that money that institutes and comprises your big refund. All right. Now, understanding why big refunds aren't free money, because a lot of taxpayers, and I find this a lot in my tax practices, that a lot of taxpayers believe that refunds are free money, almost like a lottery. They're not really sure and understanding how the makeup of a tax refund is comprised. There are two different types of refund, the way I look at it. There is a refund that is primarily comprised of money that you, the taxpayer, withhold from your pay, and that's usually in the form of a federal withholding that is for the IRS payment, and then a state withholding if your state has taxes. And there are other taxes that are mandatorily withheld, like Social Security and Medicare. But the two that we're talking about that comprise refunds are going to be federal withholdings and state withholdings. So a lot of people think that these withholdings um, go to pay their taxes, and they, are part of the refund. And in essence, the refund is, most refunds that are paid to most taxpayers actually are a return of the taxpayers' money. But there are another type of refunds that will include payments from the government, and then that money plus any withholdings that the taxpayer has managed to withhold throughout the year. After reconciliation or after tax preparation is performed, and all the deductions and the credits and the individuals that comprise the dependents, and all the numbers have been crunched, and you come up with a number that is working in your favor. They call that an overpayment, and then you ask the government to refund that overpayment back to you. And then some overpayments are comprised again of withholding that the taxpayer has managed to withhold throughout the year, and then also payments that come from the government. And some of those payments that are probably the most prominent are the earned income credit and the child tax credit. And then I know that there are some payments that we're all familiar with that have happened in the last few years, most notably stimulus payment. And that was actually a payment of money from the government to taxpayers, and then that was put in their tax return along with any withholdings that they have to comprise what a lot of people think is a refund. So when we talk about refund, we have to look at it in two different lights. Is this a pure refund that is money that was withheld in anticipation of paying your tax bill when it's reconciled, let's say from January through April 15th? Or is it maybe a combination of what you withheld to pay your tax bill plus an embedded payment, maybe for you being in a certain economic or marital situation, like head of household person that's taking care of dependents, and then they get the earned income credit, or maybe even a child tax credit, or maybe a dependent care credit. But the idea is that on one hand, there's a pure refund that's just withholding, and then on the other hand, there's a refund that has withholdings potentially and embedded tax payments from the government. Okay, so we got to look at those things um, in separately from each other. So my contention is the pure refund that you get back from only money that you withheld, that you withheld. Um, I don't think that getting a huge refund or a big refund is such a good thing. Now, if your refund has embedded payments from the government or is just payments from the government, then yeah, absolutely, you want that refund or that payment that constitute what we call a refund. You want that payment to be as large as possible because that's the money coming from the government. And if you're a recipient of that money, yeah, you want that to be as large as possible. So I sit down every year with taxpayers and clients that have a misunderstanding of what a refund is, and that's why I'm talking about this topic. And then how to use a refund or the money that is withheld in its most efficient way. Okay, so let's give another example. Okay, and I sat down with someone today, and they received around $6,000 refund, and it was a pure refund made up of withholdings on the federal side. And they got really excited, and I said, I posed a question because I knew I would be talking about this tonight. The question I posed was, hey, do you really understand what a refund is made up of? And the taxpayer said, yeah, this is money that the government is giving us after we do our taxes, and they're giving this money to us. And right then and there, um, I knew that I had to explain to this taxpayer, to my client, what an actual refund was in their particular case. And in their particular case, it was a pure refund. And they're a high earning client making double six figures. They were looking forward to getting hopefully getting a big refund. They didn't know whether they were going to get one or not. After we reconciled everything, there was about a $6,000 refund, a little bit over, and they were excited to get it. Now, again, don't get me wrong, I would be excited about the money, but after I made an explanation to them about where that money came from, and that they had overpaid in their taxes by $6,000, we kind of did a calculation. We said that if you take that $6,000 and divide it into 12, meaning 12 months, that's $500 extra dollars that you could have had in your cash flow, in your monthly cash flow, that you could have been doing something with. And that's why I contend that a pure big refund, absent of the embedded payments from the government, is not a good thing. And we talked about, well, what could have been done with that additional $500 a month. Well, you could have invested it. You could have paid off some debt. In this case, the taxpayer had a little debt, credit card debt, and or you could have built your savings, or in a lot of taxpayers and a lot of people's cases, we could build up our emergency funds in case when emergency would happen. So after the explanation to that particular taxpayer and client, we looked and made some adjustments to their W-4 withholding, and in this case, their G-4, because that's the form that you use for withholding in Georgia. We made the changes, and we brought it down so that they would still have some room. They would get a minimal refund, and if there were some changes, we were going to be checking back with each other on a quarterly basis, because the client, the taxpayer, didn't necessarily know whether they were going to be getting a raise. So the idea is that you can hope for a big refund, or you can hope to not to pay, or you can actually take certain steps and be proactive and monitor your withholdings and make adjustments periodically. Okay, so I want to talk about 10 hidden costs of overpaying taxes. Now, these are not necessarily the symptoms, but this is what you might be missing out on if you overpay and are looking for a big refund of your own money from the government. So number one, write this down. Number one, you're giving the government an interest-free loan of your money instead of you earning money on that money. So again, in that particular situation, $500 a month was basically sent to the government, and the government didn't pay the taxpayer any interest or anything. So there was a missed opportunity to earn money on that money that was being withheld or over withheld. Okay. You also lose out. Number two, you also lose out on the investment growth. Okay, so that same $6,000 or $500 a month could have been put into an index fund and received interest every month in an interest-bearing account, and received interest every month. So again, it's still your money, you still have access to it, but maybe by the end of the year, you'd have the 6,000 plus some money depending on the interest rate in which the index fund was earning you. Okay, that's number two. Number three, a lot of taxpayers and clients and people, um, depending on what their economic situation is, they live month to month, paycheck to paycheck, and every month is um, kind of dicey, and they're trying to determine if their ends are going to meet. So the reality of the situation was some of us, and myself included, at different times in my life, we put things on credit cards instead of paying cash for them. And in this particular case, you get concerned about making the ends meet and charging things on your credit card, but an additional $500 per month using this scenario would forego that, which would keep your credit card debt low, which would keep your interest that you pay on the credit card low, and you wouldn't necessarily um, have be short on cash as much depending on what you spend per month. But that additional $500 in your income stream could help you forego additional credit card debt. Number four, obviously cash flow suffers. Okay, and cash flow is that money that's coming into your in your income stream that you have access to, that you use for your discretionary income needs, and then if the flow isn't there, then you get bogged down, and you potentially have to do things like use credit cards or things like that, or maybe even borrow money. But if you had that extra cash flow, that the the withholdings that you over withheld, if you had that back into your income stream, then you wouldn't necessarily have to be concerned if something came up that was unexpected, because the goal would be you take that money, have it into some account, again, for whatever you would need it for, savings or investing or paying down credit card debt. All right. Number five, you miss out on opportunities if you got a side hustle or a secondary business. Okay. Biggest topic of conversation I have with a lot of my clients that have a side business or even want to start a side business like an LLC is that they don't have the money, or they don't have the money to do certain things once they get their business up and running. In this particular case, that big refund of $6,000, $500 a month, that could be something that, if the case is yours, you have a side business. Now you got $500 extra dollars a month to use on marketing, or budget for inventory, or different things that you can use to enhance your business, to make it grow, to get it up and running even. But having that additional money month to month provides you with the opportunity to increase and better that side hustle. Number six, you could use that money to fund your retirement, or some partial amount of that money to fund your retirement. You can put that money in a Roth IRA, or if you're a business owner or have a side business, you can put it into a SEP IRA, or a SEP, or an individual 401k, or you can put more money into your health savings account, which would also lower your tax bill and then allow you to pay for medical expenses with tax-free dollars. Number seven, this is one of the hidden costs of overpaying and having too much withholdings and getting a big refund, but you're waiting on that windfall. Again, let's go back to the conversation that I had with my coworker teammate earlier today, and she was explaining to me how she kind of uses that refund as almost a forced savings account, and she looks forward to taking that refund and doing something with it. And in my mind, you're waiting and delaying something that you might be able to do month to month, and then you're waiting on the government, and in some cases, you may have to wait a little longer if there are delays in the government for returning those extra withholdings to you in the form of a refund. So you're at the mercy, so to speak, of the government. It could be the IRS or the state, because you're waiting on your refund, you're waiting on the government instead of having access to that money at any point in time, even if it was as it was growing, 500, 1,000, 1,500, as it was growing throughout the year, you still have access versus waiting to the end of the tax season or tax season to get your money back. All right. Number 8. In some cases, you may, even when you get a big refund, you may have to still pay additional taxes on bonuses and investments. And so, again, having access to that cash month to month, not getting such a big refund, will allow you to maybe pay taxes that you have that come from a late bonus or some investments. And then number 9, refund delays again, waiting on the refund, waiting on the government to send you the money. Again, the thought and the anticipation, and again, having the government control your money in your future, that's not something that I believe is a good thing for taxpayers. I believe taxpayers should have the ability to control their funds, their money as best possible, and especially if they have the opportunity for it to grow. And then number 10, finally, sometimes a big refund means that you might not be optimizing your deductions and your credits. And what that means is that you're getting more money than you might have because you did not maximize your deductions or optimize your credits properly, and there was money coming back to you that you might have been able to utilize to bring your tax burden down further. And then again, because you got a big refund, the reason why you got a big refund was because you didn't necessarily maximize those deductions and credits. So those are 10 things that happen, or there are 10 hidden costs of overpaying taxes. There are more, but those are just 10 that I identified and I want to bring to your attention, okay? Okay, next in this particular section of the session, I want to talk about one of my principles, or what I call the immutable principles. And in every session, I like to talk about some principles that are financial principles that are related to taxes, but also can be used throughout life and throughout your other lives other than your tax life. And I want to talk about tonight the law of the cash flow control, the law of cash flow control. Okay. And the law of cash flow control states that managing your financial resources wisely, controlling your income, your expenses, and your investments leads to stability and prosperity, while poor financial stewardship results in lack and debt. So, in personal finance, the person that controls their cash flow controls their financial future, whereas when you let the IRS hold on to too much of your money for too long a period of time, all year long, you lose control of that money and you lose control of that cash flow. And the idea of this principle is you want to be the person and the person that's in control of your cash flow versus the person that gives that control to someone else like the government, IRS, or the state. Um, the wealthy, the more financially astute taxpayers and people in this world, they don't wait on money to come to them. They proactively seek to have their money make money, and that's the principle. Um, they manage their money proactively and not reactively, and that's exactly what these sessions are all about. It's about being proactive and not reactive. And this law of cash flow control goes back into those um, those 10 um, hidden costs of overpaying in taxes. It's all about the cash flow and having that cash flow, and then having the ability for you to choose and you to decide how you want your money to be utilized. Okay, so let's talk about some examples of how and what could happen if you kept more of the money year round versus waiting on a big windfall refund of your own money. Okay, and in this example, we're talking about a W-2 employee, and the best thing and the first thing that you can do is adjust your W-4 withholding. And I mentioned this in a previous session, but there is a tool that I use in our offices and with my tax clients. It's called the W-4 withholding estimator. And write this down. You can go to irs.gov, do a search in the upper right-hand corner, and put W-4 withholding estimator. And what this is a interactive kind of modular setting where you want to make sure that you're withholding the amount that would be sufficient to pay your tax bill, but also not too much to get a big refund, so that you can control the cash flow month to month, or even bi-weekly when you get your paycheck. But so you go to irs.gov, you go to W-4 withholding estimator, and it'll take you through a series of modules, and you're asking you questions about your particular finance situation, your particular work situation, your family situation. And as you go through these modules, you move forward, move forward, move forward, and then the last module will give you an idea of what your withholdings are going to be for that year, based on the previous information that you put in the previous modules, which again dealt with your income and dealt with your family size and things like that. And it'll give you what you should be withholding from your pay to achieve the number that you want. The cool thing about this estimator is that at the end, it gives you the ability to adjust your withholding. And it gives you the ability to withhold to the point where this, it's very, very, very little, which means you'll have more control over your cash flow throughout the months. But it also gives you the ability to push it to a higher withholding and withhold a greater amount. And it even gives you an option to withhold additional monies on a pay period basis in addition. So I like this calculator, this estimator. I like the fact that it's interactive. I like the fact that it gives you a little bit more control, because over the last few years, the withholdings instructions and the withholding form that changed in 2018, it was complicated and crazy before. And even now, it's less questions, but I would say as a tax professional that when my clients sit down with me, withholdings are all over the place. And this estimator actually gives you an idea of how things work and from the withholding standpoint, and it also gives you a lot of control on what the final numbers are going to be. So yeah, in that particular case, you want to change your withholding, and you want to monitor your withholdings as well. Again, you don't want to set it and forget it. If you're looking to be proactive and you want to give the government the fewest dollars you can and pay your tax bill, then you need to monitor your pay stub and monitor your paycheck and talk to your tax professional on a periodic basis. How am I looking? How am I withholding? I don't want to give the government my money. I want to have more of my money month to month, and you have to monitor it. You have to be proactive. Okay. That way you increase your take-home pay, and you'll have extra money to do what you want to do throughout the months. And when you come down to tax time, you won't have a huge whopping refund, but you would have had access to that money throughout the months, and it would be in your disposable income, and it would allow you to do some things on a proactive basis and not a reactive basis. Okay. Now, here's another scenario, an example for if you are a business owner. Okay. Now, business owners are, in not all cases, but in a lot of cases, most cases, as they're making money throughout the course of the year, they are supposed to send the government monies to pay their tax bill at the end of the year, and they call it estimated taxes. And so you estimate your taxes based on prior years. You estimate your taxes on forecasting and budgeting, and then every quarter, at the end of the quarter, you send the government taxes to be withheld, put in like an escrow account, if you will, and then once you reconcile, either you get that money back in the form of a refund, just like a W-2 employee, or if you didn't send them enough, you'll have to owe. Now, just like a W-2 employee can adjust their withholdings, a business owner can make adjustments to their estimated tax payments. And again, it takes forethought, it takes planning. You have to be proactive, and you need to probably talk to your accountant or your tax professional. But again, if you're a business owner like myself, there are times when your cash flow is extremely important, and it's extremely important when it's low. And if you have the ability, we have the ability to control that if we plan and pre-plan about and how much we send estimated taxes to the government. So with some forethought and with some pre-planning, you can look at your previous years, you can make forecasts about your sales for that year, and you can make calculations on what to send the government so that you don't send the IRS or the states too much money, and you send them just enough to pay your tax bill. So that means that you have that extra cash in your business to use for cash flow, and you could use that for paying payroll expenses or expenses for maybe rent if you're renting an office space, or you can buy new equipment. But having access to that cash month to month, or even in this business case, quarterly, allows you to have more control and gives you the ability to put yourself in a better cash position and not be so strained because you're sending additional monies that you didn't have to the government to pay for your taxes, and then you reconcile those taxes and you get a big refund. And again, it looks good, but it's just refunding you your own money, which you could have had a use of throughout the year. Okay, and that's an example of what a business owner can do. Okay, um, here's a couple of ways to reduce your overpayments. Okay, if you're a business, let's say you're a business owner, and you have uh, instead of waiting for a big refund, you you make the plans, you design what you're going to send to the government, estimate it, and you design it so that it's very little that you're going to get back. Then you now have cash flow, and again, the ability to pay down debt if you're a business owner. And most business, well, I won't say most business, but a lot of business owners, including myself, we borrow money for our business periodically, time to time, to add into the cash flow. So now that you pre-planned and you forecasted correctly and you sent what you believe is the appropriate amount of estimated taxes, now you have that money again back into your cash flow. And you can, if you got previous loans, you can pay those loans down a lot faster, pay creditors down a lot faster, or just add into the cash flow. You might want to get bonuses and things like that. But the point is, you now have the ability, because you have the control, because you didn't send the government too much of your money, because you actually planned. And again, that's what these sessions are all about. So one more example of somebody that took the steps to reduce their overpayments and save money. He was business owner that we dealt with a few years ago. He subsequently sold his business, but when we started working with him, he was getting these huge refunds back. I don't know, maybe like $12,000 a year, and we were like, "Hey, man, had you ever thought about lowering the withholdings that you send to the government for your estimated taxes?" And he said he never really thought about it because his accountant always did it, that way. So we started working with him, and we took a look backwards at the previous year's tax returns, and we saw that his sales were always in a certain range, in that he had the ability to reduce what he sent the government in estimated taxes, because his business was always going to be in this range. If he continued to use the same business model and continued to do the business the same way he had. So we worked with him a few years before he sold his business, and we took that 12,000, we took it all the way down to $1,000 that he was going to get back every year, within a few $100 here and there, and we took that additional 11,000 that he was getting back in the form of a refund, and every month we would take that 11,000 divided by 12 and start putting it into a SEP, self-employment plan, a SEP IRA, and we increased his retirement fund dramatically in those 3 years before he actually sold the business. And that's just one example of having the ability to control your cash flow by planning and sending the right amount to the government. That can happen either whether you're a W-2 employee or a business owner sending estimated taxes. It's all about the pre-planning, the making estimates and budgeting, and then monitoring throughout the year to make sure that you're not sending the government too much money so you don't get a huge refund. And having that money available to you month to month just gives you so many more options to handle your finances and be proactive. Okay. So closing tonight, I really want to have a few. We want to give you a few ideas or some thoughts about preference. Okay. So preference about large refunds is personal. And in preparation for this session, there were questions that I asked taxpayers and employees that work for me and business owners about how they feel about refunds. And then based on those feelings, what I determined is that feelings really dictate how a person handles a refund. Once they know what a refund is, once they know what a pure refund is versus a refund that has embedded payments in it. Now, everybody likes receiving a lot of money. And what I found out is that a lot of taxpayers, they don't care what the source is. They just, they like to see the lump sum. They like to see a big amount. Some taxpayers like to use the government to help them be more disciplined and quote unquote save money. And then they get the money back and they believe that they don't have the discipline to save that money and that they would spend it. And obviously, in a lot of cases, that is probably true. What I'm going to contend is that you do have the ability to be disciplined enough to not use the government as a forced vehicle for saving your money. And I'm going to say that based on the fact that if you have a dream, okay, and I always ask at the end of these sessions for you to remember or ask yourself what's my dream. If you have a dream, if you have a vision, if you have a goal, that is the motivation that it's going to take if you're serious about achieving that goal. And we're talking about finance here, and we're talking about money, and we all know, and I'm going to stick with it, that money's just a tool. Money's just a tool for us to get things or live a certain lifestyle, or maybe to help people, or to do whatever you want to do with. And if your dream and your vision is strong enough and cemented enough, then you have the ability. You're going to have the ability to to take on a more proactive approach to your tax life. You're going to have the ability to enjoy. No. Let me take that. You're going to have the ability to have somebody help you in your quest to reach your dream, your goal, your vision, a professional, and then you're going to have the ability to be more proactive, have somebody to help you, and then when you start to see the fruits of your labor or the fruits of your discipline, then it's going to promote you even more to be even more disciplined and even more ready and hungry to make your dream happen. And again, when I say dream, I mean, again, it could be a vision, it could be a goal, it could be And they come in all different varieties. It could be retiring early. It could be giving more money to the church. It could be retiring early so you can volunteer. It could be making sure that your children or your grandchildren get an opportunity to go to college. But again, the idea is that being proactive, having a vision, having a dream, believing that you can do it yourself and not necessarily relying upon the government to be your forced savior or your savior, um, in the fact of getting a big refund, then I believe that you have the ability to do that. And if you don't have the ability, you can actually, have somebody help you. Find a professional that would help you to create the dream that you want by being a little bit more disciplined and not necessarily waiting on a refund. Okay, so the idea of this topic tonight was really to bring attention to what a refund really is. Okay, and there are basically two types of refund. There's a pure refund that comes from withholding that you as a taxpayer withhold primarily for federal and state purposes. There is a refund that has payments from the government embedded in it, okay, and also any withholding that you have. And again, when we're talking about refunds, big refund, if it's coming from government money, that's great because it's what I call free money, but nothing's really free. But if it's your money, then I'm gonna suggest that you at least give this topic some thought, and the idea of managing that overflow or overpayment a little better and a little bit more um, controlled is a good thing, and you have the ability to make those adjustments and talk with a professional and control that overflow for all those reasons that we stated earlier. It's going to be better overall for you, and it's going to allow you to feel better about yourself, and it's going to allow you to not have the government in your pocket, in your business, as much as in the past. Okay. Um, Finally, I want to say that um, without a strategy, in a lot of cases, you're just kind of hoping for a big refund. With a strategy, you're taking control of your income and your financial future. And an action step for going forward for this week: if you are receiving refunds of over, let's say, $1,500 or $2,000, in my opinion, you should probably look at maybe being a little bit more proactive and adjusting your withholdings if you're an employee, okay? Or adjusting your estimated taxes if you're a business owner and you're making estimated tax payments, but allowing yourself to control your destiny a little bit more, and just one action, taking control of your finances and your withholdings, and then using that to help you to fulfill your dream, your goal, your vision. And once again, I just want to say and ask you, what's your dream? Thanks a lot. See you next time.